Hello, traders. It's Friday, February 24th. We're 3 hours into trading, the last trading day of the week. Seen some selling pressure this week. We're going to get to that in just a moment. First, I want to take a look at a trade that has not gone well for us. It's Boeing. We were going to sell a bullish put spread. The notion here was that the stock had relative strength. It was compressing near the high. If the market had any type of rally, this stock was going to participate. It had already weathered a lot of market selling, so this compression was likely to continue. We sold a March 17th, 205, 200 bullish put spread for $1. So I'm going to show you how we leg out of these. Now, we don't want to leg out of these very often, and you have to have all of the elements intact for what I'm going to show you. This is a dangerous maneuver. Most of you are not going to wait for everything to line up, and you're going to take what was a bullish position and turn it into a bearish position that could potentially be a nightmare. For the vast majority of you, just close the spread as a spread. Do not take this unnecessary risk. But I see the elements setting up right now for us to be able to leg out of the trade, and I'm going to show you how we do that and why we do that. So this is a very important lesson. So again, we're expecting this stock to stay within this trading range. It's weathered a lot of market selling, so regardless of what the market does, the stock should be able to hold up pretty well. And these were some bearish market days, and the stock actually did hold up quite well. But last night there was some news that came out on it. They have a fuselage problem in their production, and so they're delaying deliveries. They're not delaying production, they're delaying deliveries. So they're going to investigate. Is this going to have a long-term impact on the company and on the stock? We don't know. All we care about is price action, because the institutions are going to tell us how they feel about this news, and we're simply going to follow what they're doing. So you can see that we've got a low plus trend line that has been breached, a low minus trend line that's been breached, and here is a much longer term low plus trend line that's also being breached, and the 50-day moving average, all happening at once. So when we put these bullish put spreads on, we are leaning on relative strength, and we're leaning on this technical support. Well, when that technical support is violated, when it's breached, now all of those buyers who have been supporting the stock have pulled their bids. They're no longer interested in this stock. Sellers are aggressive, and this stock in particular, because it's had so much strength, is probably going to see some profit taking. So you're going to have some money exiting the stock. Market's been relatively weak. Let's take some gains. Let's see how the news plays out. We'll go to the sideline. That's the thinking right now. So what you have to wait for is signs of that relative weakness. So now I'm going to go into a 5-minute chart. This is what the stock has been doing so far today. You'll notice a steady tick, tick, tick lower, lower highs. Okay, orange line below zero. Oh, it's weak relative to the market. So this is the very first component that we need to have. And look, we had a nice market rally off of the low right in here. The market actually got to the high of the day, and it was going to fill in the gap. And then we had a bearish hammer, and we have a bearish 1OP cross. So right now, market's not looking so good. Big gap down below the 50-day moving average, below an upward sloping trend line that dates all the way back to this candle from October 13th. So if we visually draw it, we can see that we've got that trend line breach. We have a 50-day moving average breach. Okay, the market is fairly weak. Yes, it did bounce this morning, but we're probably going to test that low again. Even if we start drifting down to it, we're expecting Boeing to pick up some momentum because it has been weak all day. And this is the critical tell right here. Market bounces, Boeing drifts lower. So this is when we would try to buy back our 205 put and leg out of the position. So I'm going to put up the 205 put so you can see where it's currently trading, and it is 945 by 965, somewhere in the 955 range. You'll probably be able to reel this put back in, and now we are just naked long the $200 put. Those are currently trading 665 by 685. So our opinion has all of a sudden changed from neutral to slightly bullish when we established that spread to outright bearish. Well, what does that mean? That means that this short had better stand on its own. And if it can't stand on its own, then we should not be legging out of this spread. And we also don't want to be legging out of this spread if this is just a temporary intraday pullback, just a bounce down to the support line and then boom, bounces right back up just like it did yesterday. Well, this is not news related and it hasn't closed below those technical support levels. This is a swing trade, so we need to let the stock move around. We don't make decisions on this until the close on a swing trade, because it's going to move around during the course of the day. We have 4 weeks left on this spread, so there's no real reason to hit the panic button because we are not going to have to worry about early assignment risk for weeks. But there is an opportunity for us to leg out of this. The market is showing some signs of strain today, and we have this bearish 10P cross and this resistance at the high. So if we start getting this market pullback, I'm expecting Boeing to continue to drift lower. It has a lot of room to fall before it gets to the support level. So I want to have that cushion. I want to have that breathing room as early as possible in the trading day. But I've got to wait for all of these elements to set up. And so now if I get the market decline, and I get the decline in the stock, then my $200 puts are going to start going up in value. Well, where would I exit those $200 puts? Yes, I think Boeing can stand on its own as far as a short position for an overnight, but this is a trade that has gone bad. So my first inclination is to try and scratch the trade. Well, if I bought those put options back for $9 and let's say 60 cents, then my goal is to try and sell the $200 put for $8.60. If I can do that, now I've scratched the trade because I initially put that spread on for a $1 credit, and $8.60 plus the $1 credit is $9.60. That is what I paid for these puts right here. And that's how you leg out. So during the course of the day, I want to see those options move my way, and I have the right ingredients for it right here. So if the market continues to sell off, I want to see the stock continue to sell off. I'd like to try and get back to that $8.60 level. Would I take it off there? I'd probably take half of it off. Now, the bonus is sometimes you're going to get into a situation, and it could happen today. We still got about 4 hours left in the trading day, 3 hours left in the trading day. So what could happen is the market really falls pretty hard. We've got that technical weakness, and the stock starts to really crumble below these technical support levels, and I'm able to get $9.60 for the $200 puts. Now, if that happens, now I've been able to close that spread down for even, and I put it on for $1. So I've made my initial $1 credit. I can put it behind me. So again, this stock has had news, and it's going to happen. We've got plenty of time to expiration, so we don't need to worry about it. The key was we're going to evaluate how the market is reacting to that news. Are the institutions still in there selling the stock? If they are, and we have this setup so that we've got a market tailwind, market's going to be dropping, and we have relative weakness in the stock, then we've got the right ingredients to be able to leg out of this spread. So that's how we do it. What else did I do recently? I showed you MOS yesterday. Again, that position was based on the market being able to finish strong yesterday, which it did finish pretty close to the high yesterday. And we're going to get into market analysis, but it finished well off of its high. The stock, on the other hand, had to finish above a trend line breach right here that we were going to be leaning on, and that 200-day moving average. It was not able to close above that downward sloping trend line, so I would not have advised selling that bullish put spread yet. Do I still like it? We're looking at selling the March 17th 49.48 bullish put spread for 20 cents. Well, now that the stock has backed off a little bit, if the market starts to show some signs of support and this 100-day moving average is holding just fine, maybe I would be willing to do that, but let's see what happens when the market comes in. Until then, I'm starting to see a little bit of selling pressure, and the stock has got to prove to me that it can hold that 200-day moving average. Well, you can see it is just below that level right now. So let's take a look at the market. Let's see what's happening overall. We had quite a volatile day yesterday, and we had this big drop right in here. And so bottom of the market fell off in spades. I mean, these were long red candles. This was heavy volume, and it certainly looked like we were going to blow through the 50-day moving average and keep going lower. But it found support, and then eventually it rallied. There's been a lot of talk about the zero DTE options right now and the extreme volume that we're seeing in them. Those are options that expire the same day. Institutions are in there playing, and perhaps that's some of the reason for big swings like this. When you have a gap up and a gap reversal, this gives you a full head of steam. So yes, if they want to start buying out of the money put options, you can spark a lot of selling like this, because you've got a full head of steam and you've got a chance for that momentum to build. But the market eventually did find support, and then now it goes the other way. We're seeing a lot of this back and forth two-sided price action recently. We've been seeing it for many months. It's one of the reasons that I believe the market is transitioning from a bearish market into more of a sideways market with a trading range. And today is no exception. So we opened lower and then tried to make a new low and tried to make a new low and tried to make a new low, wasn't able to. So once that bid has been tested and they can't drive the market any lower, well, then we get a little bounce. And so right now you can see that is the gap. That is the high or the low from yesterday, and that was the high this morning. So gap down, we test that was support, now resistance. Get this long candle in here. Now we're going to try the downside. Can't drive the market lower. Let's try and rally back to that resistance point. And now we're starting to roll over a little bit. So this is a critical juncture for the market. And we're going to go one way or the other. So my reason for being neutral to slightly bullish is that all the major moving averages are coming into play, and we are above them, and we are above the trend line. So you've got your upward sloping trend line right here. Now that's been breached, and the 50-day moving average has been breached. If we close right here below this 50-day moving average, we're going to test the 200-day moving average and the 100-day moving average. And we were just above it on the low from today. So yes, these two support levels are going to be challenged as well. If we break through that 100-day moving average, well, then we're going to continue to drift lower. But the action on the way down has been very herky-jerky, mixed overlapping candles, and we've seen that in the daily price action. So it's not like what we were seeing earlier in the year where the bottom is absolutely just falling out. Wham, 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 making nice steady progress on the downside. Now we're getting a lot of this back and forth. So we'll see what happens around these major moving averages. But as long as we're above them, which we were in here, and as long as we've got all the technicals pointing higher, we stick with that. At such time that they're violated and they're breached, well, then we have to adjust our thesis, we have to adjust our positions, we have to adjust our risk. Only on follow through this 100-day moving average, where I see a nice red candle through it, closing on the low on heavy volume, would I want to short this market. Until then, I think we're going to have back and forth kind of jerky trading. I personally had expected that we test this level right in here. We get some nice green candles in here, and then we move a little bit higher. Maybe we make a double top and then roll over, but I was expecting a bounce in here. I haven't gotten it so far. Yesterday looked very encouraging. So we had this nice bullish hammer off of this 50-day moving average, had some overnight Fed speak, the ECB, perhaps the largest because they said in March they are going to be hiking by 50 basis points. I don't think that was a big shock. So those are overhangs for the market right now. So what do we do as far as trading? Well, I've shown you that we had a Boeing trade that we're currently having to adjust and leg out of. We've got the Mosaic trade, which has not quite panned out yet as far as initiating it, so I'd be holding off on that. We do have a couple of other positions, and these are positions where I would gladly take ownership of the stock. FSLY selling that 1250 put for 45 cents. Yeah, I liked it and I still like it. And the stock is still holding up fairly well. And I would be a willing buyer at that price. Sono was another one. And there we were looking to sell the $20 put with the idea of buying the stock here at the breakout, which was about the $19.50 level. Stock gets put to me. I am a willing buyer. So I still like that strategy. And the day is not done. Who knows how this candle might finish? If it finishes above the 50-day moving average for the SPY, well, then that becomes a little bit bullish in terms of seeing at least a little bit of a bounce. So they try to hammer it, try to hammer it, try to hammer it a number of times, and that support is held. If we finish where we are right now, I have to construe that as bearish and that we are probably going to test these two major moving averages in the next week. The good news is we should see some decent price action in the next week or so. So let's take a look and see if we've got anything that looks attractive to us. So we've got something set up for the bearish side. So we've got the bullish side covered with recent picks. Let's see what we can find on the bearish side. Let's see if we can use some of our trend lines to find a bearish pick. I'm going to go through Red Royal Flush is not a bad one. All I'm looking for are technical breakdowns in the underlying stock. And you can see that was a nice trend line breach right in there. mRNA, SNOW. That is a sign of major technical support. So first what I would like to do is clear off some of these lines, and I want to add the current line so that we can see where they're coming into play. And you can see that that's a sign of major technical support. We've got many, many trend lines coming into play from different angles. That also means that if we're going to breach this, we better do it in a substantial way. Otherwise, we're more likely to bounce. These trend lines are a sign of support. Often we're looking for breaches, 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 and we want it to be breached, but it's really technical support, so we should be expecting bounces, not breaches. When we do get these breaches, they have to come on heavy volume, and we need to see those nice long red candles right through them. So in this case, yeah, this is a pretty significant breakdown here. Continue to look at a few more. I do also want to mention one other thing, and that is that the SPY is currently on the 200-day moving average. That is a nice technical breakdown. Abbott. You can see it's below all the major moving averages. And we've got some real relative weakness. There was that little market bounce that we had referenced earlier. So let's go into that 5-minute chart so we can keep track of what's happening. There's your market bounce. Abbott has a tiny little bounce and then instantly makes a new low of the day. Yeah, this is a pretty good looking short here. J&J, big bounce, sell off. JD continuing to drift lower, never bounced. Let's take a look at that daily chart. And yes, a couple of trend line breaches right in here. Those are significant. This is pretty heavy selling. JD right now looks pretty darn good to me as far as a short. And that could be our short pick of the day. AA, you've got a couple of really nice upward sloping trend lines here that are breached to the downside. We got the 100-day moving average coming into play here. So that is lending some support. You can see the tail right here. So the stock is off of the low. Just going to keep looking. I've already got one that I am interested in, PayPal. Got a couple of breaches to the downside, 50-day moving average there. You can see how the stock was rejected from these major moving averages. These trend lines are great, by the way. I just released them about a week ago. They are automatically drawn, and we're able to search for them as well. So the tedious job of having to draw these trend lines every single day is done for you. So you can see how this is a nice breakdown below both of those trend lines, and we have follow through with plenty of room to get down to the low, and we have relative weakness in PayPal as well. So I like that one also. Multiple breakdowns here. We do have horizontal support for 3M, so I wouldn't be as crazy about that, but these are nice breaches. You can see, got one there, got a low minus right here, a low minus right here. That's a low plus. So yeah, this is a pretty good head of steam into that low. If we take that out and make a new low, then yes, I think that's going to be a decent play. Let's take a look at the M5. And you can see it did bounce with the market. So if I had my druthers, I would prefer that the stock was not able to bounce like this today, that it had steady selling pressure, just like Boeing, just like JD. So we'll continue to take a look at a few more. We got to go into that daily chart view. BMY, this is a nice trend line breach right in here also, below the major moving averages. Yeah, that one looks pretty darn good. Relative weakness here. Go into the M5. See how easy it is to find these? And I'm sorry, this is PENN, not BMY. That was my bad. I was looking at the wrong column. Although, wow, BMY actually looking pretty weak also. Multiple support here, breaking that. PENN though, between the two, I liked a little bit better because that is right on that major technical support level and breaking below it. So I do like that. Just continuing to click through and to take, there's EA, that is a low minus, pretty good trend line breach. Now, as far as these breaches, the descending trend lines, which we're calling low minus because they are connecting the lows and because they are negatively sloped, these will be less reliable then a upward sloping trend line that connects the lows. We call those low pluses. Still valid. And there you can see multiple technical breakdowns in SPWR and through this horizontal support, showing you quite a few that actually look good. But right now, I really do like what I saw in JD. I think that's going to be a nice one. Drug stocks are definitely weak. We can see a lot of them in here as well. So PayPal was another one that I liked. Take one more look at that. It's got plenty of room to the downside. JD is going to be the pick that I'm going to go with. I like JD short. It has not been able to come up for air today. We've seen consistent selling in it all day long today. I think this is going to be a decent swing. It's got plenty of room on the downside. We also have FXI, which is the Chinese index on its 100-day moving average. It breached the 200-day moving average. That is a bearish engulfing candle. I am short FXI, by the way. I am also long ES. I'm long the S&P futures, but my ratio is I'm short half as much FXI as I am long SPY. If the SPY can't get through the 50-day moving average today, I'm going to close that trade down. I'm going to take my lumps on it. I'm going to go to the sidelines. I'm going to be looking at shorts. And I think that QQQ would be preferable on the short side. It is testing the 200-day moving average, and we could be heading into a risk-off mode if we're not able to bounce today. So JD is your pick of the day. I promised you I'm going to do 2 videos per week. So we'll do a follow-up on JD. Right now, yes, Sono, we've sold those puts. FSLY, we sold those puts. MOS, we haven't done anything with. BA, we're legging out of that spread. And let's take one last look at BA and see how that's doing. And it is on its low of the day, ticking lower right now, market ticking lower. So that's in pretty decent shape. Take a quick look at those options, see where they are. And so they're currently 990 by 10, so moving our way. But in all honesty, all we really care about are these $200 puts right here. And the objective there is to try and exit these for $8.60. Scratch the trade, got blindsided by some bad news, can't predict it, have to adjust for that. That's what we're doing. That's what traders have to do. Thanks so much for watching, everyone. Have a great weekend. We'll see you next week. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.